what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2, and then they migrate to 5. So I think in this one, it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range.
I am everything we're talking about, the economy, macro, all of this stuff just emboldens me and gets me more excited and more optimistic about Bitcoin and the ecosystem and the people that we're meeting and the operators of these companies, the founders. There's some cats out there. Yeah. I mean, I feel I don't understand some of the stuff there are some really smart people out there, and I'm super excited about this space.
Institutional allocation to Bitcoin in the base case. I know at one point we said 2.5%. That may have gone down a little, but if we're right, that assumption alone, I have been in the markets for a long time, and as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%. And then they migrate to 2, and then they migrate to 5. So I think in this one, it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. And so I think it's that one alone is very conservative. And if you look at another one, the corporate balance sheets, Tesla, Square have Bitcoin on the balance sheets. But we make very cautious assumptions, and I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin, and the bull case is 5%. If we're right, and the purchasing power of Bitcoin becomes so obvious in the years ahead, meaning the purchasing power goes up instead of cash, dollars, staying pretty flat, if not in real terms deteriorating, then more and more corporate treasuries are going to be putting Bitcoin on their balance sheets. And in fact, they'll be the analysts will start questioning them. Why do you have 95% of your cash in a depreciating asset when you could put it into a cash equivalent like Bitcoin and have an appreciating asset? So remittances is another very big market. We assume 10% of remittances in the base case and 25%, instantaneous, no fees or minimal fees compared to 8% fees as migrants send back to their home countries. Mm-hmm. Sovereign treasuries, 1%, only 1% in the base case, 5% in the bull. Just like corporate treasuries, they'll be under pressure to start increasing their exposure to Bitcoin. And emerging markets, not just the state treasuries, but all of the populations who are subject to these swings in their currencies and absolute demolition of their wealth when they go through hyperinflations. We assume 3% of the populations in the emerging markets, 3% of their assets in the base case go to Bitcoin and 10% in the bull. So those are some of the cases. And then there's the other utility economic settlement network case, and that's 5% of all settlements in the base case and 10% in the bull case.
right? So you've got the people who really know the company the best. These hodlers know Bitcoin the best.
They're buying more.
They're buying more, and they're hoarding it, just like a closely held company that it's very difficult to get liquidity on the other side. So in the markets, and so what do I see? I see in the near future again, like we don't need the ETFs for Bitcoin to grow by factors. But when that happens, I do see a period of price discovery, which is that's the operative phrase. Because what happens with institutions is when they need to buy some, they just say, buy $10 million, buy $25 million, buy $50 million today, just participate, meaning just go along with whatever's going on in the market, meaning try to be as much percentage of the trade as you can without moving the price yourself. Just participate. And so what happens is you have all the institutions getting in there and all of them just participating because they're like, well, I got the average price, I didn't do better or worse, and I did just as well as anybody else.
They just want some exposure at whatever
they want. And so price discovery happens when you have these pockets of illiquidity where it just jumps up and they all just move up together, and they'll just keep doing that and keep doing that and keep doing that until they get the amount that they need. And it doesn't matter if a few $1 million worth trades or $100 million worth trades, it can move the price depending on whether or not there are any closely held shares willing to be given up at that price. And so that's when people who are confused by this are like, well, but you need an additional $500 billion to come into the market for Bitcoin to double from here. And the answer is no. If nobody sells between here and $70,000 Bitcoin and you trade one sat,
you're just getting warmed
one
up.
single sat, the price of Bitcoin has doubled. And now it's worth then everybody's, share of that chain is now worth, $1 trillion.